This is it. This might be one of the most important weeks of the entire year for markets. Bitcoin is on edge, stocks are on edge, the economy is flashing signals everywhere, and in the next 5 days, we get data earnings, Fed speakers, inflation expectations, and job numbers that could shock the system. If you care about your money, you need to hear this. Buckle up. What's up, family? It's Coach Massey, and you're locked into the Daily Hodl. This is where we break down the biggest financial news, Bitcoin insights, and market trends so you can stay informed, stay disciplined, and stay ready for opportunity. Let's dive right in together. So, why this week is unlike any other we've seen recently? I'll tell you. This week is stacked, not normal stacked. I am talking about market moving, volatility spiking, risk on or risk off levels of stacked. Here it is, lined up. First one, New York Fed manufacturing data on Monday. This is a pulse check on the industrial economy. When manufacturing slows, it usually tells us two things. First, demand is cooling. Second, recession pressure is rising. If Monday prints weak, markets will already start the week shaky. Manufacturing sets the tone. Number two, Fed meeting minutes. They're on Wednesday, and this is huge. The Fed minutes tell us exactly what the policymakers were really thinking behind closed doors, and we know they're divided right now. Not the press conference, not the headlines, the real thoughts of those people. Traders look for hints and more rate hikes possible or rate cuts, which we expect. Are they scared of inflation? Are they worried about recession, the labor market? These minutes move markets. Next, Nvidia's earnings Wednesday. This is huge. This might be the most watched earnings report of the quarter. Nvidia controls the AI narrative. If Nvidia beats big tech rallies, well, you know it's going to be great. If Nvidia misses or guides lower, and I think they will, I think guidance is going to be lower, it's going to be a problem. Because you can see that the whole stock market, even yes, Bitcoin can be influenced by the appetite of Nvidia this Wednesday. Coming up after that, September jobs report. Jobs reports are the heartbeat of the U.S. economy. Strong jobs can mean sticky inflation. Weak jobs can signal a slowdown or recession. Either way, the market is reacting, and we might say bigger unemployment, and that's what we're going to be looking for. So jobs week is never quiet. Next up after that, Philly Fed manufacturing data, Thursday. This is another key gauge of regional manufacturing, similar to New York data, but a different part of the country. When both regions print weak numbers, markets start talking, well, recession again. Then after that, we have October existing home sales on Thursday as well. This is massive. Housing is one of the pillars of the entire U.S. economy. Existing home sales tell us how well buyers and sellers are reacting to high mortgage rates. If sales collapse, it means the consumer is under pressure. And housing data always impacts market mood and sometimes Bitcoin because of overall liquidity shifts. And it's that time of year where usually markets slow down. November Services PMI on Friday. Services make up 70% of the U.S. economy. If services slow down, the entire economy slows down. PMI tells us if business leaders expect expansion or contraction. This is a forward-looking indicator. Investors love this data. After that, November Manufacturing PMI, which is Friday. Another PMI update. But if manufacturing shows contraction while services weaken, markets usually react negatively. Investors want to see stability. PMI is an early warning system. And then we have Michigan consumer sentiment on Friday. Consumer sentiment is the emotional side of the economy. Are people confident? Are people scared? Are they worried about prices or jobs? When sentiment collapses, spending collapses. When spending collapses, well, we all know the economy weakens, called a recession. This report matters more than I think people realize. We also have Michigan inflation expectations on Friday. Critical inflation reading. The Fed is going to see what the public expects prices to do in the future. If expectations rise, the Fed gets nervous. And if expectations fall, markets can relax. This one number can shift stocks, bonds, crypto in minutes. And then, yes, 14 Fed speaker events in a single week. And let me be very crystal clear. These are not just speeches. These are landmines for the market. Because every one of those 14 moments is a chance for something to go sideways. 14 chances for the market to overreact. 14 moments where one sentence can spark panic. 14 opportunities for confusion and misinterpretation. You see, traders hang on to every word the Fed says right now because nobody knows the path ahead. Are rate cuts coming down again in December? Or are they delaying those cuts? Are they seeing signs of a slowdown? Terrible labor market? Are they staying hawkish because inflation is still sticky? You see, the market is desperate for direction. And when markets are desperate, they become emotional, and emotional markets overreact all the time. This is why every single Fed speech injects volatility. Not once in a while, not occasionally, every single time. And a single phrase like data dependent, uncertainty, tight labor market, or inflation remains elevated, they all can light up algorithms, trigger sell offs, and send asset prices swinging. You see, this is the week where traders need to buckle up because 14 Fed speakers means 14 opportunities for markets to get confused, scared, excited maybe, or completely blindsided. It is a storm of mixed messages, market reactions, and knee jerk moves, especially with a divided Fed. And if you're not prepared, well, you're reacting instead of positioning yourself. So let's talk about why this week could bring major volatility as well. Think about it: manufacturing, jobs, housing, retail sentiment, inflation expectations, Nvidia earnings, Fed minutes, 14 Fed speeches. This is a storm. And markets move during storms. You see, Bitcoin especially reacts when the macro picture gets noisy because uncertainty often pushes weak hands out while disciplined holders, well, they see the long view. And if you look this weekend, not to sugarcoat anything, but not a politician version or not a CNBC version I'm giving you. I'm giving you the real facts, the truth. Because we saw this weekend, going back to that Bitcoin, well, it changed its pattern. So it might start down this weekend, CME gap, and go up and fly off the handles, which would be great too. So much uncertainty, no one really knows. But we do know one thing. There are two types of economies going on right now. Number one, the asset owners. These are the people who own real estate, stocks, Bitcoin, businesses, rental properties, land, or even a 401k. Now, let's be honest. This group is living its best economy of their lives, really. Home values are at record highs. Bitcoin has been on fire. Not this year, I guess, we're negative, but you get my point. The stock market keeps hitting new highs for sure. Gold's on fire. Even with higher rates, liquidity is flowing to assets. And every pullback is turning another buying opportunity for these people. If you own assets, it feels like your wind is at your back. Your net worth climbs while you sleep. You wake up richer than you did yesterday. You're not stressed about the grocery bill because your house just went up $5,000 this month. This is economy one. But economy two, well, is everyone else. There's the other half of America in this K-shaped economy. People who are relying on only wages, people who don't own a home, people who are renting, people buried in high prices with no assets to balance the pain, people who don't have exposure to inflation hedging or appreciating investments. And for these families, it doesn't feel like we're heading toward a recession. It feels like we're already in one because groceries are outrageous, gas hits the wallet like a punch, rent is taking over full paychecks, and healthcare and insurance are climbing. Savings are drying up fast, credit card debt is exploding, student debt is in default, and wage growth is getting erased by inflation. Every month feels tighter than the last. It feels like you're running uphill while the ground keeps sliding out beneath you. This is economy two. So two economies, one America. Same nation, same news cycle, completely different lived experiences. If you own assets, you feel wealthy. If you don't, you feel squeezed. And this is the great divide almost nobody in the mainstream media wants to talk about, but I'm giving it to you here. We have to talk about it because understanding this separation is the key to understanding the entire financial system right now. We're not just experiencing inflation. We're not just experiencing higher rates. We're experiencing a wealth split that grows wider every month. Asset owners are rising. Non-owners are drowning. This is why I push people every day to educate themselves on this channel with the Daily Hodl, to get disciplined, and to start owning something: real estate, Bitcoin, a side business, a brokerage account, anything that lifts you out of the economy that is suffocating the working class. Because the truth is very simple. In America today, the game is rigged in favor of people who own assets and merciless against the people who don't. Read Rich Dad, Poor Dad if you haven't already. You see, this is why understanding markets matter. This is why Bitcoin matters. This is why financial education matters. Bitcoin thrives on volatility, sure. It thrives on macro noise. It thrives on, when a traditional system looks shaky, like what we have right now with fiat. But when we have this much data dropping in one single week, Bitcoin can swing sharply in either direction. If data comes in strong, risk assets might pump. If data comes in weak, people may rotate into safety. If data is mixed, we get chop, confusion, and volatility. You see, this week will not be quiet. This week is a turning point week for all of us. Discipline matters more than emotion. Remember, this content is for educational purposes only and not financial advice, but I think it's good information. Before we wrap, I want to hear from you though. Which of the events this week do you think will move markets the most? Nvidia earnings, jobs data, Fed minutes, Bitcoin volatility, consumer sentiment, any of those? Let me know in the comments. And don't forget to like, ring that bell, and subscribe to this channel if you haven't already. And when you're done with all that, share this with someone who loves real Bitcoin news and real financial talk just like you. Well, that's your Daily Hodl. Stay sharp, stay disciplined, and as always, lead, pray, hodl. I'll see you in the next one tomorrow.